myself, they call me J.O. N to the easy E. Know that we undefeated.
Now, I'm pleased to introduce our next speaker, Stephen Lindsay, who's a business analyst at Mentor at FSC Capital in the UK, and he's going to be discussing investing in innovative UK early-stage startups. Please welcome Stephen to the stage.
Welcome to Forever, man.
Can you hear me? Yes, good. Hello, everybody. It's good to see you all. I've got some slides here. There we go. There's the first slide. And you can see me in the middle there. And that's our team. And I'm quite proud of the fact that I'm the only one with a beer. And may it continue like that. In fact, I think that's our 9.5-year anniversary, because we just celebrated our 10-year anniversary recently, and that was last summer. Us all having a good time. So what are we? We are the UK's most active early stage investor. We invest in a range of companies. We're sector agnostic. We tend to prefer technology companies, which is good news for the guys here. If any of you have your own companies or want to set up your own companies, we could be the people to help you at some point. The only caveat is we do only invest in UK companies, so you might want to make yourself a UK company if you want some of our money. And I'll tell you why that actually is something people do sometimes, to do with some very generous tax breaks in this country. So we're a fund manager. We get money from rich people. We invest in companies. They don't have to be rich. We get money from all sorts of people. We also have a large network of angel investors, individual investors. And we also have the government through the British Business Bank that co-invests with us, normally, well, exclusively in regional, non-London projects. So we've got 3 sources of funding, which is probably why we're the most active in the country. Now, there's a selection of a few companies we've invested in. They won't mean anything to you, but the criteria for us investing is always, it's pretty simple. We need to make high returns for our investors. We get 3,500 applications for investment every year. They come in directly into our website. Every morning I see a dozen. They come from universities like Oxford, Cambridge, Sheffield, and we work closely with them. We have some fantastic projects from them. And sometimes they actually come from the angels I mentioned. We know some of our angels very well. When they recommend companies, we invest in them. So, we have a diverse portfolio. We're into fintech, green tech, insurance tech. We do consumer stocks like tea and coffee companies, but less so. And we've even got bicycle tech. We've got blockchain. We've got metaverse. I'll give you some of the names. They won't mean too much to you, but there's Film Chain, which is one of our companies, and they manage the financials for people making a film to do with securing the contracts and making sure the pay all works, all held on Ethereum. They've been going about 6 or 7 years, so really early stage company in this space and doing really well. There's one called BuzzMint, who mint tokens for people and create campaigns. There's one called Imperia, not so much blockchain, but it's a virtual online retail experience for art and fashion. We've got one in fashion again, Digital Fashion Framework, which do tools for digital outfits. Some of these do really well. We've had companies, we have a sort of 80-20 rule, what we find, like you get in life. If we invest in a portfolio, and typically every year we invest in, let's say, 20 companies in our main portfolio, we'd expect 6 of them to go bankrupt, maybe 13 or 14 to sort of meander around and still exist, but not actually exit, and maybe 3 or 4 to exit. And we target 3 times returns. So 3 times your money is what we target. But if you look at our recent portfolios, I think our 2015-16 portfolio is up 7 times. Our 17-18 portfolio is up 7.5 times, so well in excess of what we target. We've made 350 investments so far, so there's 350 companies out there in the UK who've had our money, and some are doing very well, some exceptionally well. The first money we give people is typically around £250,000, which, as I said, it's the early stage. It's what gets people going. Now, there are two key elements, I touched on them earlier, to do with the tax situation in the UK. And tax is a boring subject normally, but not in the UK. If there's these two schemes, one's called the Seed Enterprise Initiative Scheme, SEIS, and that's our main business. And the other's called, drop the S, it's called the Enterprise Initiative Scheme, EIS. And about 80% of all early stage funding in this country comes through either of those two tax schemes. So it's huge. Anybody who doesn't qualify for those in this country is competing against those the ones that do. And I'll give you an example of why one is so lucrative. It almost beggars belief. I'll give you an example. If you invest in a startup company or our fund of startup companies, let's say you invested, I'll make the numbers small and easy to understand. If you invested £1,000, and by the way, I forgot to say, at the end, if I remember to keep quiet in a few minutes, I'll take some questions if there's some time. So you can think of one if, I've got to remember to stop in time though. On the SEIS, if you invested £1,000 and you're a UK taxpayer, so this would be your investors, not you, they would get £500 back at the end of the year when they've do their tax return, as long as they've paid £500 tax. So they're in half price. If, and this happens, as I mentioned earlier, a company went bankrupt, they come along to the government again and say, I'd like loss relief, please. And they get, well, it depends on their tax rate, but if they're on the top rate, which is 45% at the moment in this country, probably going up, they'd get 45% back of the 500 net that they'd invested. So you can see that they're in for around a quarter of what they put in. So they've got all that exposure for nothing. Well, not for nothing, but for about around a quarter of the actual exposure. So it's a hugely popular scheme. The only thing is investors can only put 200,000, actually they're changing the rules from April. Investors will be allowed to put £200,000 a year in. Companies can raise 250,000. After that, it's still good. They move to the EIS one. Same thing really, but companies can raise £12 million. That's a hell of a lot. We've even had listed companies on stock markets raising through this scheme. And investors get 30% back. Not so bad. The other thing is, if any of these companies go on to be the next stars, Facebook-style stars, you will never, ever pay any tax on the profits, no capital gains tax, which is quite incredible. We actually had some Danish, a couple of years ago, we had about 20 Danish angel investors touring London, and I met them and told them about this scheme, and they didn't believe me. They said they would never do that in Denmark. And I said, well, why not? And I said, it helps companies. They said, no, the Danish government wouldn't see it like that. They'd say, people have paid tax to the government, and now you want to give it back to them? This is unfair. But over here, we don't see it that way. The entrepreneurs are happy. And we do have companies coming to register their companies and live in the UK because of the ease of raising money through these schemes. Let's see what we've got here. Right, this is a sort of slide. I'll start in the top corner with the yellow block there. The people, and I'm talking about the people in the companies that come and ask us for money. That's the most important thing for us. Quite often, I'd say more important than the actual idea, because a good entrepreneur will make money again and again and again, it doesn't matter what the subject. So we really do look at the people. We look at their roles within the company, and we also look at their character. Are they good? Do they have a communicator? Do they have an executor? Do they have a mediator? And we really do find that if we pay attention to that, the chances of success is much higher. We do invest in individuals. We prefer teams, but we do invest in individuals. Teams tend to succeed more. On valuations, that varies. You get a food and drink company. When they exit, they're only worth about 1.5 times their revenue. If they come along and say to me, we're worth £1 million at the beginning, even when they're making £1 million, they're only worth 1.5. So it makes it very hard to invest. Tech companies, we've got one that's up 200 times, one called Onfido. We invested when it was, I think, 400,000 valuation. It's like a unicorn now. It's like $1 billion. That wasn't, unfortunately, in our funds. Wish it was, but our angel investors did invest. Actually, there's about 4 minutes left. Rather than me talking through each point there, has anybody got any questions? Don't all put your hand up. There, somebody at the back. Here comes a microphone, because I couldn't hear you.
Hey, mate. Sorry. Would you say that a lack of clear regulations from the FCA is stifling investment in UK crypto companies?
A lack of regulation from the FCA is stifling investment in token companies?
Yeah, just backing in UK crypto companies. Would you say they're really waiting for this licensing regime to come together and the waiting list to drop down, or is it a sort of factor that's holding them back?
I'm not an expert on that. I mean, I happen to be involved with somebody who's trying to set up a stock exchange in this country for an index on coins. So they're taking an index which exists already, 10 coins, and it's an index, and that would be a cash-settled futures and options on it, and the FCA are heavily involved in that. And at the moment, they are being quite clear on that, because I was at the meeting where we met them last week, and they didn't like the idea, or they don't allow those products on a particular coin, like Ethereum or Bitcoin. But they do allow it on, or are likely to allow it on an index, which is cash settled. So as far as I could see, the regulation that this company was looking to get, there were clear rules on it. It was maybe the argument is they're not as open as they could be, but that's as much as I know about the FCA regulation on the subject. If that helps. Has anybody else got anything to ask? No. Right, well, I'll wrap up. Let me just see if there's anything else.
There was someone who had their hand up just there, if you wanted to.
Oh, yes, hello. There's two of you.
Hold on, mate.
Here comes a mic.
What if I'm not a UK citizen? I'm from Europe.
Say that one more time, please.
What if I am not a UK citizen?
If you're not a UK citizen, in terms of being a company here or getting money from our fund?
Yeah.
Yeah, that's what I'm saying. Unfortunately, we only invest through one of these two schemes. And I know a lot of you are not from the UK, but it's a government incentive scheme. In fact, we were always worried it would be stopped because in a way it's state aid. It's helping companies. And when we were in the EU, we were always worried that we would be told, this isn't allowed. We're not in the EU now, so they've actually boosted this scheme quite recently. But unfortunately, you have to be a UK company. And we have several companies with non-nationals of the UK who run them, who've come and domiciled here to set their companies up, register them on Companies House, which is the UK Register of Companies, and done everything here because of, one of the reasons is because of this wonderful tax scheme. A lot of companies come here because even in a downturn, even in an economic recession, we tend, right now, things aren't great, but the money we're getting coming into our funds has not been dented. It's still good. And it's partly because people, you see all those banks over the road there in Canary Wharf, when those guys get their bonuses every year and they realise they've got a £100,000 tax bill about to pay, they realise that if they invested £200,000 in our companies, they've got no tax bill to pay. They get the money back, and that really tends to override sometimes the macroeconomic considerations. So I'm sorry we can't invest in a foreign company, but it's something to think about in terms of relocating. People do.
All right, thank you.
Okay. Thank you. I think I've run out of time, so thank you very much for listening.